You're watching today's video technical update presented by FX Times. It is Friday, September 17th, 2010. I'm Fan Yang, your chartered market technician, and I'll go over some developments in the Forex market. The platform I'll be using for analysis is VT Trader. The Japanese yen started the week mainly strengthening. Wednesday's intervention pressured the currency. As we'll see though, most yen crosses are still within the bearish or at most ranging context. The pound yen, euro yen, Aussie yen, and Canadian dollar yen, as well as the US dollar yen, are all ranging or bearish. The Swissy yen is the only pair that has a bullish outlook. Therefore, the market might not be respecting the intervention and may want to test the pre-intervention levels. Let's see what the charts tell us. This video is being produced at about 3:45 p.m. Eastern Time near the end of this week's trading. So starting with US dollar yen, we start the week here at around 84.20. The market declined, strengthening the yen, and then on Wednesday the market shot up here, or rather the Japanese government intervened, causing this dollar yen to shoot up, breaking above both moving averages, previous highs for many days. And now we are seeing, we're not seeing much of a follow through. The market sort of stalled this rally, and now we have a bearish divergence. Okay, so we may be looking for the market may be correcting this rally to start next week. In any case, it doesn't look like there's a follow through, but if there is, looking at the daily, you see that the market here the last couple of days has been have been showing us doji candles. So after this really strong sharp move, the market immediately fell into indecision, and this is appropriate as it is nearing this declining trend line. So it broke this shorter intermediate term trend line, but this longer intermediate term trend line is intact, and therefore the bearish mode is still intact. So this isn't even showing us any even ranging outlook. We actually have more negative or bearish outlook, as if the market can't break above, we have this negative reversal forming. Your highs here, your RSI high is a lot higher here than these previous highs, but the price level high is a lot lower than these previous highs. Okay, so if the market, even if the market does break this temporarily, if it's not able to break above 86.80, there is a very high chance that the market will continue to retest 83, maybe even lower towards 82. Pound yen is similar to the dollar yen in that this rally brought the pair up to test a declining trend line. The overall trend in the pound yen has not been as bearish, but we do see this, it is bearish, and we are basically turned ranging. So the pound yen has already turned ranging, where the dollar yen continues to be bearish. But even this ranging period has a very bearish bias, as the market continues to make lower lows here, lower low, and the current rally tests this 61.8% at this 134 level, as well as this declining trend line, and the last couple of days have been doji candles, just like the dollar yen. The RSI here is failing to break above 60, so there is still this bearish possibility for the pound yen even after the intervention. 4-hour time frame, we see a possible wedge developing. This is more clear in the 1-hour time frame, by the way. I actually saw this in the 1-hour time frame, zoomed out back to the 4-hour time frame. You see this these two candlesticks show you exhaustion, and the market may be declining. We should look for the market, if the market has turned bullish, we should look for the market to find support around this area. These previous highs here, this area here, just above 130.20, and just below or even at 131. Okay, so pound yen still looking bearish, but if it is bullish, it should be supported around 131, and the RSI should stay above 50, at least staying above 40, preferably above 50. Now the euro yen is in a similar situation. It's not a declining trend line, but here we have this ranging action, and again there is a bearish bias, and if you zoom out a little you see that the bearish bias is even stronger in the longer term, and this rally brings the market up near this resistance area around 114. Here it popped up to test almost 115, but we should see resistance soon. And these last couple of days have not been very strong after this Marabuzzo candle. The RSI staying relatively still bearish. If it turns back, then we have a negative reversal, which suggests this swing projection, okay, towards 104. Alright, so 4-hour time frame, similarly we have a possible wedge developing, rising wedge, or even just actually just a channel, just a rising channel. And here we have a possible, let me just zoom in a little, positive reversal. So we may not be done with this current rally just yet. Although after it broke above this channel, we have reached the target at 112, a little bit above 112, and this is actually projected a little higher towards 113.80 if the market doesn't turn lower. If the market is not able to break this low here at 110.50, then it could continue rallying. But if it breaks below 110.50, we can start considering the market going back to yen strength and shorting euro yen, pound yen, and other yen crosses. Moving on to the Aussie yen and the Canadian dollar yen. Here's the Aussie yen in the daily time frame. We see that these swing projections also apply to this swing, would mean that we have completed this projection, and this 81 area anyway is an important resistance. 81.90 area is your 61.8%, so a break above that means that we may have bottomed here, and the market would be showing a bullish breakout, along with the RSI breaking above 70. The RSI still below 70, but although it did break above 60, showing you that the bearish outlook is no longer valid. What could still be valid is a ranging market, and if it is valid, then we are at the resistance of a range. Okay, 4-hour time frame, we see a negative bearish divergence as well as a positive reversal developing. So we may so if the market doesn't continue declining here and break below this previous low at 79.50, so basically breaking below 79.50 is going to be your bearish signal. Otherwise, there's still some bullish attempt left. Going to, and by the way, that should bring the market down. Let's see, since this is a range, we could look at the entire range and look for it to come back to the middle, which is around 76.40 area. Or we could take this latest swing and look for the 61.8% area, which is around the same area near the middle of this consolidation zone anyway. Moving on to the Canadian dollar yen, also, so this pair has been declining. The market was consolidating, so Canadian dollar was actually gaining on the yen. Here Australian dollar was also gaining on the yen before the intervention, and there was a push towards the resistance. Here there's a push towards back into the zone. There's resistance here at 82, but the market broke above that. But this declining trend line is providing some resistance, as well as 61.8% retracement area of this decline at 83.50 area. So these couple of days the last couple of days shown this market stall and possibly even show you a bit reversal combination. The RSI staying below 60, as well as giving you a negative reversal. So Aussie yen, Canadian dollar yen still looking bearish in the longer run and in the intermediate term. 4-hour time frame, we see possible topping action, but we need the market to break below this 82 area for a confirmation that the market is returning into the bearish mode. The Swiss yen is the only yen pair that we looked at that has a bullish outlook, and it's projected towards the 88 area. The 87.70 area may start to provide resistance. If it breaks above this 88 area, then it's a major bullish signal. Otherwise, there should be resistance there. In the 4-hour time frame, we see that the market had a bullish breakout, and this decline here supported at 38.2% retracement. And then if this rally breaks above 85.50, if the market can close above that in the 4-hour time frame, 85.50, then the market may be extending this rally towards 88, 87.70. That wraps it up for the week. Thanks for watching. Once again, I'm Fan Yang from FXTimes.com, wishing you a great weekend.